No one expects inflation to really become an issue, right? So
well, that's good, isn't it?
You know, I guess if rates are going up for the right reason, it's good. So, you know, if you think about the flattening of the yield curve, that's where banks can get into trouble. So depending on how you're positioned, if you're positioned right going into this and the rising rates were no surprise, no one should be sitting around going, gee, I'm surprised that the short term is coming up. If you're positioned right, you're fine. If you're not positioned right, the folks that have what's called kind of a spread shop, you know, borrowing short, lending long, they're going to wind up having a squeeze. You're going to see it in earnings this quarter.
We're going to have Pat Toomey on later. I mean, the Republicans are not on board at all with, I think it was Corker and Toomey introduced that resolution yesterday. Do you think the worst case scenario is going to happen for the stock market, Kathy? Or?
I think everyone's kind of fearing the worst case scenario, but so far things haven't really been that bad. I think, you know, earlier before we went on air, Steve said the markets are taking everything in stride. And I think, you know, so far we haven't seen the true bad news hit. Everyone's worried about the potential impact on the U.S. economy, the global economies with everything going on, but we haven't seen data-wise a significant slowdown. And I think, you know, we've got inflation data from the U.S. coming out.
That's too early, though, isn't it?
It is.
It's way too early for it to show up in the data. So we're still on pins and needles.
Right. And I think until we see that, no one's really going to panic. And the Federal Reserve's not going to panic. I think next week we've got retail sales. They're still going to be decent. So there's only so much forward looking you can have until you start to see evidence of that. And I think hope is still resonant in the markets. And we obviously haven't seen a significant sell-off in stocks. So overall, until that panic comes into the markets, you know, we could still see some progress and some stability.
Is it a currency? Is that where we're going to see if something starts unraveling? Is that where we'd see it, and it'd be emerging markets, something like that? Is that where the real systemic trouble could come from? That's
where the real pain will be, surely. I think right now you're seeing the U.S. dollar perform very, very well, and that's causing some strife in the region. And I think, you know, with China also using their currency as a ploy to offset some of these tariffs, I think that's also going to affect, you know, what's happening in the emerging markets. So you are going to see the first signs of pain there. The question is it going to come here? And I think to some degree, yes. But so far, you know, everything's been limited. Everyone's worried about the impact of the trade tensions on U.S. consumers. And I think, you know, for the most part, it's a lot of bark and very little bite so far, at least I hope. And I think, you know, we really need to see the evidence show up before everyone starts, you know, ringing the fire alarms.
We're seeing that too. You know, our
commercial lending, yeah.
The commercial lending is pretty good. I'll share one story with you. I think it's relevant. We have a client who does importing, household goods from China, right? So you would think that they're going to be really concerned with what's going on these days. They're just built out a brand new warehouse. We're financing a $24 million credit facility to do that. And when you talk to these guys, this is a company that was founded in 1962. So they started during the Cuban Missile Crisis. They don't get easily phased. The founders were two Holocaust survivors. They tell us, look, we import today from China. We used to import from Korea. Before that, we used to import from Japan. We know people in Vietnam. We know people in Mexico. Now, their products have been impacted directly yet. But when they look at this stuff, they say, well, you know, we'll see. It hasn't really shown up.
But the list, their products must be on that list of the $200 billion in goods.
Yeah, they're next up. Yeah, they're next up. So they look at it and they say, okay, they're going to have to find an alternative source. But they don't look at it and say, gee, let's stop the business.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.